The world of investing in the stock market offers a great opportunity for individuals to create substantial wealth. With a bit of patience and some starting capital, you can gradually build a nest egg that enables you to retire comfortably and enjoy your free time without worrying about money. However, investing typically requires a long-term commitment and discipline, which not everyone possesses or is willing to develop. But investing is not the only way of making money in the stock market. An alternative to traditional investing is trading, which is a faster paced method of making money. Trading usually involves buying and selling stocks within a short period of time, with day trading being the most popular form. Day traders create a portfolio and actively monitor stock movements, buying and selling based on specific strategies or systems. While trading may seem more efficient as it enables one to create wealth over a shorter period of time, it is not without its challenges. The fees of buying and selling stocks, along with taxes and other administrative fees, can eat into your profits. Moreover, trading successfully requires an ability to predict stock movements accurately, which is extremely difficult to do. Only a very small percentage of traders are actually successful at doing this and also manage to do this consistently. Despite these difficulties, many people are drawn to the potential rewards of trading due to the potential outlook of creating wealth without having to wait for old age. However, as mentioned, very few make it in the trading world, which is why those who do actually make it become legends in their own right. And today we're going to talk about one of these legends whose remarkable achievements in the world of trading made him stand out in a world where very few thrive and even fewer even manage to make a profit. That legend is Takashi Kotegawa. Despite trying very hard to find anything about his early life, I was not able to find much. The earliest information I can find on Takashi is that he was born in Ichikawa, Chiba around 1978 in Japan. From then on, the next piece of information comes when he begins trading stocks around 2001 during one of the heaviest bear markets in Japanese history. While we may not know who he was before this, we know who he was at the time. Takashi is no extravagant person. He keeps it all pretty simple, living in a small apartment with spending his day watching anime and eating cup noodles, while also browsing the various web forums under the name BNF. The abbreviation itself doesn't mean anything, and from what I can understand, it is a sampling of letters from the name Niederhofer, after the famous investor of the same name. Allegedly, it was a documentary of Niederhofer that would inspire the young Takashi to get into the world of trading. Up until now, everything about Takashi sounds more or less normal, and at the surface, he would seem just like a normal guy. But he would soon go on to make the trade that would make him famous. However, before that, Takashi had to try and trade for himself, and this was not easy. As mentioned, Japan was in a bear market in 2001, and a heavy one at that. And during this time, Takashi had saved up capital through frugal living and part-time jobs while in college. At this time, it is also important to remember that information was not widely available as it is today. The only thing Takashi could really do as a trader at this point in time was to study charts. It is said that he studied the chart of the Nikkei 25 for 2 years before making his first trade, and yet he found himself in the same place alongside all the other traders who dared enter the dragon's den of the Japanese stock market at the time. He found himself losing money. But this was just for a time. By fine-tuning his trading strategy and trying to understand the different sectors of the index, as well as a little luck, he turned his situation around, and by 2002 he had amassed around $1 million. However, times were changing though. As the Japanese bear market shifted winds and suddenly turned into a bull market, Takashi was faced with a problem. His strategy relied on what was called contrarian trading, only working in a bear market, and would not work with stocks now flying high and with him now having a lot more to lose. So he had to sit down and rethink his strategy, and in the end it worked out for him. By 2004, he would turn that initial $1 million into $11 million, successfully adapting to the changing market, and for a time he was happy. But while $11 million is a lot of money, this is not the amount that will turn you into a legend. But Takashi would soon find that moment that would, but it would not happen in the way you may think. On one trading day in September 2005, where everything seemed business as usual, this would be far from the case for a new IPO company called JCOM Holdings due to a man at an investment firm called Soho Securities. While we do not have his name, this man would go on to make a mistake that would cost him everything. At the time, he had the simple task of making a trade, one JCOM stock for 610,000 yen. However, instead of doing this, he would go on to sell 610,000 shares of JCOM stock for 1 yen each. And as the trend went live, it was impossible to take it back, and as you can imagine, the stock dropped significantly. And anyone who was looking at the charts at the time would be guessing what caused this. Could it be an error by the software, or did someone know something about JCOM that others did not? But for Takashi, this was not the time to dwell on these questions. It was time to buy. Now, as some of you may have experienced some of the rather incredible stock surges throughout the past years, you know that there are measures in place to halt stocks that are moving too fast too quickly. Now, while you may agree or disagree on such a mechanism, the Tokyo Stock Exchange at the time was no different. However, it did not matter, as even though there was a limit on how much an individual stock could fall in a short period of time, Takashi only had one thing in mind, and that was to snatch up as much of the JCOM stock as possible. Even with the halt, he managed to buy 7,100 shares for 575,000 yen a share, which is around $3,680 a share, or a total of $26,128,000, and essentially making him a 49% owner of the company. During the day, as people would learn about what happened, they would buy in and make the price surge even higher. However, Takashi would not succumb to the pressure of selling or the uncertainties of the trade. He would just go on to hold until the next day, where the real battle would begin. As a couple of days passed since the incident, it looked as the government would not step in to do anything about the situation. In light of this, Takashi was then approached by people from Soho Securities who would like to settle the matter with him. While other people who had gotten hold of JCOM stock decided to return their shares to Soho due to possible legal implications, Takashi refused. And since there was no help to get from the authorities, they had to find a solution that both parties agreed on. Takashi made it clear that the only solution he would accept was to sell back the shares to Soho for whatever the price would be at the start of the next trading day. At the time, the prior day's price surges for the stock had left it at 975,000 yen a share, or $7,545. He would go on to sell at this price, which meant that Takashi had just made a profit of around 2 billion yen, or around $15,700,200. An astonishing achievement made by a single trader on a single trade. You can imagine the aftermath that unfolded afterwards. Takashi had just become one of the most famous traders in Japan and possibly the world, earning him the title of trading legend with the nickname the JCOM Man. And with no catches at all, no strings attached, no authorities coming after him, no secret corporate hitman gunning for him, he had not only earned financial freedom, but also cemented his legacy as the trading legend from the land of the rising sun. But after all this comes the real question. What was next? Have you ever gotten that feeling of, what do I do now? Maybe you earned that promotion or gotten that house, and while it may fill you with satisfaction for a time, you begin to look for that next big thing to achieve. Now, imagine that feeling, but times 1,000. That's how I imagine Takashi must have felt. He was not the person who wanted to travel the world or live an extravagant lifestyle. He was a simple man who had a simple love for the art of trading. So as you guessed, his story does not end here. As a matter of fact, it takes a rather dramatic turn. After his incredible trade, Takashi continued to make trades and earn a profit, and while nothing would even come close to what happened to him in 2005, he was about to face his next big challenge, the bear market at the beginning of the 2008 financial crisis. Now, while many investors at the time may have found this time especially hard as everything was just going down, this was not the case for Takashi, as he had had his beginnings in bear markets. So you can imagine that he felt right at home in this, began pulling out the strategy that had made him millions in the first place. However, now he was thinking bigger, way bigger, and had his sights on one of the biggest possible trades that could net him even more millions. the American bank Lehman Brothers. Now, some of you may be old enough to remember what actually happened to this stock during this time. At the time of Takashi having his eyes on it, he saw a 73% decline from his 25-day moving average and saw an opportunity. Everything was on track, everything made sense. According to his strategy, this was it. There was no way this would not bounce back. So as people were scrambling on where to put their money, Takashi went all in on Lehman and bought stock to the equivalent of $6.5 million. And now he just had to wait for the rebound. But as some of us remember, it never came. This was a lesson for Takashi that opened his eyes to the differences in what trading stock in Japan is when compared to the US. Takashi went on to say that this was the reason why he would never trade stock in the US again and kept on trucking with the strategy in Japan. However, Takashi's pain was not over. On the contrary, it was about to get much worse. The situation in Japan during the 2008 crisis can be explained by a lot of factors, but the factor that hit Takashi the most was the fact that nothing worked. His strategies, his experiences, his risks, nothing paid off, and as time went on, all of his trades just kept on failing. The legendary J-Com man was now facing his worst trading streak yet. So, what happened to him? Well, fortunately, the Nikkei eventually stopped falling, and through fine-tuning his strategy and following the correct trends, Takashi managed to get his mojo back and make successful trades again. I guess it just goes to show that even when you are a legend, you're not excused from the unpredictable uncertainty of the financial markets. That's why I believe this kind of field is touted by many to be so difficult. I mean, just imagine the stress you would have to go through as a successful day trader. I mean, I even got stressed learning about Takashi's trading career, but I guess that's why so few make it in day trading, and those who do almost become mythical legends in their own right. You may remember that I mentioned the idea of contrarian trading when talking about Takashi's first real trades, but what is it? Well, it is one of the key factors to Takashi's strategy. Contrarian trading basically means to trade against prevailing market sentiments, which for the bear market of Japan in 2001 would be to buy stocks instead of selling them. But how did Takashi make money doing this? Well, this is where his strategy comes in and why this could only be done in a bear market. According to old blog posts that Takashi made as BNF during this time, he will look at what you call the moving average divergence, which he describes as the average moving price during a 25-day period. If a stock had moved a certain percentile below its 25-day moving average, he would then proceed to buy it and then sell it off again when it begins to bounce back. While this may sound simple, it is clearly very complicated as you are essentially outguessing which stocks may bounce back from a fall, and in a bear market this seems as an impossible endeavor. So how did Takashi manage to be so sure of his trades? Well, it's because he only looked at the stocks that were trading way down the 25-day moving average. This would be a signal that it's being sold off way too hard. He would mention that a stock would have to move at least 20% under before he considered buying it, with 35% being a safe level to buy according to him. Again, this sounds simple enough, right? Just look at all the stocks at the Nikkei and just pick those that are trading inside this range, right? Well, the Japanese Nikkei index's full name is the Nikkei 225, and can you guess how many stocks are in this index? Correct, 225. This means that Takashi would need to be looking at essentially 225 different stocks basically all the time to try and find those that fitted inside his buying strategy. But it gets even more complicated because not all stocks are created equal, as the Nikkei 225 contains stocks belonging to all sectors which do not behave equally. Everything from oil and gas to finance covers the index, and as mentioned, they all behave differently. He mentioned that IT stocks that were impacted by the dot-com bubble would need to go as low as 45% before they were safe to buy, and stocks relating to emerging markets would need to go as low as 60%. And remember, when you are day trading, every percentage point counts, as it essentially eats into your profits. It could have devastating effects on your earnings, not to mention the immediate stress that would follow if you're not in control of your emotions. He also mentions using this strategy with penny stocks outside the Nikkei 225. Penny stocks are different than your usual stocks as their market value is low and usually small investments can have a huge impact on the price. He mentions that even small investments as low as 1 yen could impact the stock price. With these types of stocks, the approach of the strategy is tuned up to a whole different level, as he would only buy these stocks if they had a negative moving average of around 35 to 65%. However, due to the sensitivity, it was not uncommon to see them bounce back as much as 50% over a couple of days, or even just straight up doubling. But for this to be profitable, it would require him to find those special penny stocks that were inside his mentioned negative moving average. I mean, having this as an investment strategy is just insane to me. I mean, the more I read up on it, the more crazier it just gets. And to think that Takashi himself is nothing more than just a normal guy who studied charts for a couple of years before dwelling into the art of day trading, in a time where no information was widely available. When looking at stocks, according to him, he would usually during his heyday hold between 30 to 70 positions every single day and be watching between 600 and 700 different stocks on any given day. This feat of having the focus and memory to memorize that many charts and keeping at it just shows what kind of different beast he really is, and it also helps us gain an understanding of what it really takes to be a day trader, or at least a successful one. But his genius does not stop here. As I mentioned before during his story and also generally, bear markets do not last, and eventually they change into bull markets. And as mentioned before, Takashi's initial strategy only works in bear markets. So what did he do when the markets turned? Well, when it comes to a bull market, it is way less about actual numbers and much more about understanding how the market moves during these times. He had a strange quote surrounding this when talking about how to traverse a bull market. Quote, "Stocks work in mysterious ways, going up and down based not on fundamentals, but rather on price action in the future markets, as well as the overall market sentiments." End quote. So what did he mean by this? Well, he would elaborate on this by bringing up an example. In the event that for some reason one sector begins to experience a positive news story, let's say that the price of oil goes up because OPEC decides that it wants to give the employees of the major oil companies a Lambo as a Christmas bonus. This essentially makes the future earnings of oil companies go up without actually changing any fundamentals. And usually this does not mean that all oil companies go up simultaneously, as usually one or more lags behind the others. It is time like these that open up the opportunity for buying in. He would also present an example of if a company experiences a sharp fall for some reason or another, but then recoups some of that fall, it would help lift the overall index, and suddenly the market sentiment is bullish and begins to affect every single stock. While it may seem absurd to think that sentiment would play a larger role than overall fundamentals, I mean, when looking at the current stock market the last few years, that idea may not be as absurd as you think. I mean, when you look at all the hype surrounding AI companies, for example, one may ask themselves, do these companies really deserve these high valuations? And are they all really going to make it? I mean, I kind of feel like I've seen this before, I just cannot put my finger on it. But jokes aside, this strategy that BNF has cooked up for himself is just completely insane. And again, to think that he did it with no information was available at all, and also did it in some of the most riskiest aspects of trading out there. And not only did he become successful, but actually excelled at it. This is the kind of guy you bring up when talking about that not everything can be learned by reading an article or a textbook. So where is the legendary J-Com man now? Well, it is difficult to say, as from what I can gather, Takashi has not been overly active on social media since the incident of 2008, with me only being able to find snippets here and there, but overall it seems like he's doing pretty well for himself. As to whether he is still actively trading or taking a more laid-back investing approach is hard to say, but from what I can gather, he is still playing the stock market. Japan has some specific laws regarding investor transparency where public companies are required to disclose investors who owns a significant position in these said companies. And by sourcing the Japanese business register, you may be able to see Takashi's name popping up here and there. So he's definitely still in the market, but it is hard to say to which extent, and also which markets. But he has tried to diverse his investments, with him investing in different real estate ventures around Japan with mixing results. But this seems mainly to be because of the years following COVID. But I mean, when you look at the amount of wealth this man has acquired, I do not believe that he's gonna be stripped for cash anytime soon, even if he did make a couple of bad real estate investments or even bad trades. Another thing to mention that made it difficult to know exactly what Takashi is up to is that he does not seem to want to be in the public eye, which is kind of refreshing to say the least, especially when we are talking day trading, as I feel that I fear of even putting day trading in my search bar, as I'm afraid I'll get flooded with different ads and video suggestions from all these questionable people telling me that I should stop doing my 9 to 5 and start day trading, otherwise I'll remain a brokey forever. I mean, really, how can I even look myself in the mirror knowing that I do not have a Lambo or a Bugatti I can drive my Instagram model GF in, so she can use up my credit card I gave her in exchange for her telling me that I'm the best she ever had and that she loves me for who I am. I mean, how dare I get up in the morning and live my life without a coke habit? Anyway, what was it talking about? Ah yes, Takashi. Yeah, I mean, it's great seeing someone that did not change just because he earned his financial freedom and made more money than any of us will ever see in our lifetime. But you know what? That is okay. Because in the end, as long as you're cozy and living the life of your own dreams and are truly happy and satisfied, then that's okay. And if you want to pursue a better one, then go for it. But nobody's saying that you have to. I mean, this guy is probably still eating the same cup noodles that he did when he was studying stock charts. And just because you become a day trading legend does not mean you have to change those habits you are so fond of. Thanks for watching, I hope you enjoyed the video, and I'll see you in the next one.